So welcome back to Jam Crypto. I'm your host, my name's Jenny, and today is a really special episode because joined by me is a really smart guy, and he happened to be a core contributor of a platform called MarginX. So Dr. Danny Lim, how are you feeling today?
Yeah, I'm very honored to be invited on this show, and then thanks for inviting me, Jamie. So my name is Danny, the core contributor of MarginX.
Okay, since this is your first time here,
Yep.
why don't you give the audience a little bit background about yourself, and also give me like a few explanation, explain to me like I'm 5-year-old. What does MarginX do?
Some background info about myself. So I started a crypto payment project in 2017 called PundiX with my co-founders. Then in 2020, then I decided to leave the company and then started my own project. Then back then, the DeFi protocol was pretty trendy. Then we was thinking, is there anything else we can do to sort of like complement the whole ecosystems? And we think about probably a DEX, a decentralized Orderbook DEX might be the thing. So we started to dive into the space, and then in 2020 we sort of like developed MarginX, and in 2022 then we first launched our beta version 1, and then in 2023, which is this year, on August, so we have finally launched our V2 version. So MarginX is a automated limit order book market makers for perpetuals market. So in a 5-year-old terms is, if you put your money inside the pool, then we will generate a perpetual market for you, for the token holders. Wherever tokens you want, then you basically create your playground on it. Then all the setups are all automated.
Wow, that sounds very exciting. Like, even though the initial name, I was a little bit intimidated by that. But another question I want to ask is that, so you mentioned you guys have been around since 2022 or something,
Yep.
right? So like initially, how did you guys raise the money? Because I'm asking on the behalf of the audience, because people are worried that like some of the platforms may be around in bull market and not manage to make it till the next bull run, or even make through this bear market. So like, what was like the money situation?
I see. So we didn't raise any fund, and we are not planning to. It's just right now we are just bootstrap, like from the start. And I think in 2022. Last year, I think around September, so we got a grant from FunctionX Foundation. So it gives us a marketing funds to promote our platforms. And we are not planning to do the next round of fundraising, and then and we have no plan to launch our token yet. Yeah, so that's about it.
Another question I want to ask is that, because you guys focus so much on decentralized order book.
Yeah.
And you know all the DEXs, like the most popular one being Uniswap, right? Uniswap is more like an AMM. So is there like any beneficial of using an order book instead of AMM?
Yeah, right. So MM, I think was they have no order book, it's just a swap. So they will use the x times y equals to k, the constant formula to go through the buy and sell process. So it always, I mean, the formula is actually benefit to the liquidity provider. So wherever you transact, there will have a slippage and the fees. Then the other thing is the traders can only trade against the pool. So the order book, in that sense, will be in a more open way. So other market makers or other traders can actually put their orders on market makers. So the traders are not only trade against the pool, but also the other traders as well. So that makes the so-called the market more vibrant, and allows others to participate on the trading end, especially under extreme market situations, like Bitcoin dropped 20% a day. Then in that case, normally if you look at the MM pools, right, the pool will be suffered the losses. But in the order book sense, because it allows the external traders or other market makers to come in, so the risk can be diversified.
would you say it's something similar to what GMX is doing? Because I believe they have like a GMT. It's like a hedge against the pool, right?
Yeah.
Is it similar?
So I think there are two different things as well. So the GMX model are also similar like an MM model. So but the GMX model, I would say, is not really a trading. So in terms, that's actually a lending protocol. So to dive into it is basically the pool of the GMX is consistent of stablecoin and token. So if the trader wants to open a long position, so basically the pool will lend you the tokens. So if you want to short the tokens, the pool will actually lend you the stablecoin. So in this case, the risk of being controlled or being mitigated. Yes.
So in version 2, there will be liquidity provider, right?
Yes.
And at the same time, because I was reading through the white paper, and then I realized there's like some sort of mechanism to reduce impermanent loss in particularly. Could you explain it in layman terms? Like how do you guys do it? Like, how do you achieve it?
Okay, so MarginX is a automated limit order book market makers for perpetual. So basically, users can choose to inject funds like stables and tokens. And what the really innovative thing that we created is we accept LP tokens. So the LP tokens means it's derived from the Uniswap pool or whatever swap pool. So basically, when you put the funds inside a swap then in return you will receive a LP tokens. So we will use these LP tokens and collateralize as another stablecoin, which we call CUSD, and then use this CUSD to populate or do the market making on the order book of our perpetual. So what's really interesting is if you look at the component of the LP token, which is the collateral, which is the underlying collateral, is 50% of stablecoins and 50% of the tokens. So let's say the collateral, the LP token is worth $1,000, right? Then we will pull $500 on the long side, which is on the long positions, $500 for the short positions. So which means that if the tokens goes out, then our long positions, which is backed by the tokens, will be hedged. If it's for the short positions, then we will use the stablecoin as the collateral. So both sides, the risks are also be so-called controlled or be mitigated. So in this sense, our strategy, I would say, is a bit different from the spot MM because we use it as a market neutral strategies to provide the liquidity and the market making functionality for perpetual markets.
So my understanding is that there will be a constant shorting and longing automatically being done within the pool, right?
Correct.
And at the same time, I do want to ask more about the Oracle price because I was looking through the animation. So there's an Oracle and then there are like long and short orders on the side, and then the Oracle price is actually like constantly moving, right?
Yes.
So I wonder what is the, like, where do you get all these like Oracle? What's the mechanism behind it?
Okay, so the Oracle price is pretty important for perpetual markets because that will determine the funding rate, right? So we will get the Oracle price through few channels. So first one obviously is from the on-chain data feed. So for example, from Chainlink, from banks, or even from the third parties. And then the second one, which is I think is also our creative or innovative part, is we're using the LP tokens. So remember, just now I mentioned about we can use the LP token as the collateral and then use it to do the automated market making for limit order book. So we will consistently monitoring the LP token value. Price actually determines by the price of the LP tokens. Yeah, so we're using these LP tokens as one of the benchmark to determine the Oracle price as well.
Okay, got it. Well, another platform that people tend to compare MarginX with is DYDX. So there are two platforms, GMX and DYDX.
Yes.
So do you guys like have an edge? Like, what do you think?
I think we are doing, although we are perpetual DEXs, but I think we are our strategies or our path are different. So DYDX is more like a pure DEX, a pure order book DEX. So everyone's, they just act like a centralized exchange, but their order books and their settlements are on chain. So GMX is I would say it's a money lending model on the on a swap model, I would say. So ours is a bit different. Ours is more like MarginX is more like a Uniswap model. So we are permissionless listing, and then wherever users just need to market participants just need to put their funds and then use their idle funds, for example, their LP tokens, their NFT, whatever. Then they can generate any perpetual pairs they want, and then all the fees, trading fees, the liquidation fees and funding fees will go back to the liquidity provider. So our models, I would say, is more like a permissionless, like a Uniswap model, but for perpetual markets.
Okay, got it. I think that's a great summary. Well, last question I have for you to sum up our interview together is that which sector are you most bullish on? Because there are different sectors, right? NFT, whether it's DeFi or RWA. I go around and ask this question to different people during my Singapore visit. So I wonder what your answer will be.
I'm definitely bullish on DeFi.
Of course.
Yeah, of course. The reason being, I think, RWA, real assets, is actually not a new, I would say, not a new concept. It's just derived from tokenizations, right? And then I do believe if the compliance can be done, I think the RW assets, the pain point still relies on the compliance landscape. So whether regulators or the asset holders are they can shift their assets from off chain to on chain. I think that's something it's beyond the tech side to control, to be honest. But DeFi is something that I think we can use our efforts if the speed is good enough, the fast enough, and then the smart contract is secure enough, and we can use all the idle assets or rather to revitalizing the idle assets to be more prudent and then to create more value, and of course less leverage. In a less leveraged way.
Great. I think that was one of the best answers I've got so far in my Singapore visit. So thank you, Dr. Lim. Dr. Lim. Thank you, Dr. Lim, for coming to this interview. And if you guys want to check out more about MarginX, of course, all the links can be found in the description box below. I'll catch you next time.
Thank you.